Okay, here we go. So here's our credit evaluation, credit rating evaluation of Singapore, done by me, Oliver Williams, Ben Carfor, and John LaFleur. And so Singapore's government has been rated the strongest credit rating by international credit rating agencies, which is AAA, which is a prime rating. This has been done by Fitch, a finance and insurance company, the S&P, Strong Poor's Global Ratings, and Moody's, which is an investor service. You can see that lined up right up here in this chart right here. And so what exactly does that mean? It means that Singapore's consistently high ratings show that it's strong credit worthiness with extreme minimal probability of default. And for investors, that means that SGS or Singapore government securities bonds, T-bills, and treasury bills, and savings bonds are among the strongest and safest possible investments in the world. And you can see some other countries down here as well that have that strong credit rating. It means that the economy is very strong, very safe investment. And so our thesis is that while Singapore has remained resilient coming out of COVID, there are still many upcoming challenges Singapore could face, including inflation from rising global prices, an aging workforce, and most importantly, geopolitical risks with the growing U.S. and China trade tensions fueled by the war between Russia and Ukraine. And these tensions could easily and heavily affect the economic output. Singapore is relying on international trade, and China is its largest trading partner. And so we're going to see some of these risks and how we evaluate Singapore throughout this presentation.
So moving on with some indicator analysis, starting with the gross domestic product, Singapore's GDP is projected to have increased 3.5% in 2022, growing 4.1% in the third quarter, according to the Ministry of Trade and Industry in Singapore. In 2022, Singapore's GDP will have grown 3.5%, and between 0.5 and 2.5% as a whole in 2023 is predicted by the ministry as well. The manufacturing sector rose by 0.8%, construction grew by 7.8%, and the food and beverage services sector grew the most by 30.5%. Much of Singapore's continuous growth in GDP over the past couple of years has been a result of them being able to open up their borders very quickly after the COVID-19 pandemic. They were one of the first countries to be able to do this. And this has allowed for a lot of foreign money to trickle into Singaporean banks, while the Singapore dollar deposits remain steady as well.
Yeah, and so moving on to employment in Q3 of 2022, and there's since been a Q4 as well, which we've not yet researched. Singapore's unemployment rate has decreased to 2%, which is the flat 2%, which is the lowest rate since 2016, despite COVID disruptions. And the economy is still recovering, with employment surpassing pre-pandemic levels by 1.7%, which is definitely a good thing. However, 1,600 workers have been laid off, indicating that there is some reduction in costs in the manufacturing and service sections, mainly through restructuring and discontinuation of product lines. And Singapore's Ministry of Manpower, which is equivalent to the Bureau of Labor Statistics in the U.S., warns, however, that poor global economic conditions and higher global inflation and geopolitical tensions, which I've mentioned before, could impact the labor market outlook. But Singapore's overall unemployment rate is likely to be lower than the annual average of 2.7% in 2022. In 2023 as well. And another issue Singapore faces when it comes to labor is an aging labor population, something that becomes very glaringly evident when you see that close to $560 million is spent on aged care, which is about 6% of total expenditures. We're going to go over that later on as well. And further as well, to fund this aging population, Singapore found it necessary to raise sales taxes from 7 to 8%. And again, 2044, it's going to rise again to 9%, which kind of shows truly how important that aged care and that aging labor force is going to become.
To quickly talk about the price analysis, Singapore has been experiencing higher inflation due to rising global commodity prices and supply chain disruptions caused by the COVID-19 pandemic. Singapore's Department of Statistics indicates that the MAS core inflation measure reached 65.8% as of October this year, which is up 5.1% from last year's report at that time. It's important to recognize that a lot of this data was disrupted by COVID-19, and the prices of some goods and services were affected by that. But to counter these challenges, the Singapore government has implemented various policies, including supporting businesses and workers. The government has extended its job support and induced introduced measures such as the Skills Future and Enterprise Credit to support businesses and increase worker education. And they have also promoted innovation and productivity within businesses. The government has launched initiatives such as the Emerging Stronger Task Force to drive innovation and productivity in the economy. So basically, the government is spending a lot of money in social programs like this.
Yeah, and so moving on towards the summary of headlines really quickly. There have been some major headlines and risks that have been affecting confidence in Singapore's economy, but it's very important to note that Singapore has decisive policy and action which can be deployed and implemented very quickly to counter these economic challenges should they arise. And so I want to point out, okay, the thing right there. So perfect. This photo shows one of the challenges here. Climate change and environmental risk. Singapore is an island, like you can see, very close to the water, and is very vulnerable to the impacts of climate change, such as rising sea levels, especially, and extreme weather events such as tsunamis and other risks, heavy rainfall. It could easily be underwater in the next decade. And these risks could affect Singapore's infrastructure, transportation, and energy systems, which are critical for its economic growth and stability. Um, and sorry, I said decade, I meant the next century. And second, there are also a lot of U.S. and China trade tensions, which stem originally from the Ukrainian-Russian conflict, as China, after seeing Russia invade Ukraine, bolstered its military and basically enforced its border along the Taiwanese region. The U.S. has responded by expanding their military presence in Taiwan, their allies. And this affects Singapore as it has a small and open economy, which is vulnerable to trade disputes between major economies, and the ongoing trade tensions between the U.S. and China can affect Singapore's export-dependent industries, especially in sectors like electronics and manufacturing. And Singapore is also located in a very volatile, geopolitically volatile region with potential security risks between neighboring countries, which has definitely become to intensify recently. And these risks could affect business and confidence and investment in the region. It could change its stature from being a major East Asian financial hub. But it's very important to note that Singapore has, for the most part, made it past COVID. And you can see that in the Straits Times section of the SGS right here. That it makes it clear that increased levels of COVID in other countries, especially China, can lead to a tank in the stock market, which we're going to look at right here. In November 2022, where my mouse is hovering, you can see a major dip, and that's right when COVID was shaking up a neighboring China's economy. But it bounced back very quickly, especially when COVID-19 started to plateau. And so it's clear that Singapore has the ability to bounce back, and they have implementations for these challenges. For example, for the climate one, Singapore's target is to become a net zero emission city by 2050, and spends a lot of government money to invest in renewable energy and different sustainability projects in order to protect its future while diversifying its own actual economy and spending. And to mitigate the U.S. And China tensions, the government plans to strengthen local supply lines and supply chains to encourage companies to source their supplies more locally. And further, it plans to diversify its supply of critical goods and to adapt to find other sources when one supply line is disrupted. And it also is going to continue investing in new trading connections and infrastructure to maintain strong supply capabilities. So overall, we can say that Singapore's government has been closely monitoring these geopolitical risks and these climate risks and these COVID-19 risks and implementing actual measures to mitigate their impact on the economy.
To talk quickly about some metrics of economic freedom. On the Index of Economic Freedom, Singapore is the #1 ranked country in the world, and its strong protection of property rights contributes to this ranking, as well as enforcement of anti-corruption laws. Singapore is also very open to global trade, which boosts its productivity even more than nations who are in trade battles or neglect to trade with certain nations. Singapore also maintains very few strict business regulations, which promotes this economic freedom, and the unemployment rate in Singapore is consistently pretty low.
Yeah, okay. And moving on to fiscal policy, government spending. In 2022, Singapore projects to have an operating revenue of $81.75 billion, which is a 1.7% increase from the previous year. And it's very important to know, and you can see this on this graph here, that Singapore allocates almost half of its spending into social services and priorities such as daycare, social security, education, and domestic security. And the government focuses on the quality of these spendings rather than the volume, and consistently achieves outstanding outcomes in education, health, policing, despite spending a relatively small percentage of its GDP. For 2022, the total expenditure was 102.41 billion, which is a 4.1 increase from the previous year, due primarily to inflation and also greater tax collection rates. However, only 2 of the 7 major tax collecting Supreme Court saw a decrease in 2022 compared to 2021. Statutory boards collections and assets tax collected less than the previous year, but an overall increase in expenditure nonetheless, which is definitely a good thing. Singapore has increased spending almost every year while not seeing a significant change in the deficit they run, which is another good thing. And they collect enough revenue to cover the majority of their spending. And their basic revised deficit is estimated to be 25.9 billion, or 4.8% of their GDP. And this is high compared to other countries with similar GDP, such as Nigeria. But it's essential to note that Singapore consistently ranks near the top globally in almost all social areas, such as the PISA rankings, Healthy Life Expectancy, and the Gallup Law and Order Index, which is a very, very good thing to see. And Singapore has consistently demonstrated its commitment to social services and achieves excellent outcomes, which is a great testament to the quality of their government spending.
So related to fiscal policy as well, with current and historical taxes, currently the corporate tax rate in Singapore is 17% of its chargeable income for both local and foreign companies. However, a partial tax exemption is eligible for the first 300,000 SGD of chargeable income. As for personal income tax rates, this varies based on the income of a particular person, as shown in the chart on the screen. The higher the income, the more taxable income a person has. As for historical taxes, the corporate tax rate was much higher in the early 2000s. Corporate tax was even higher in the 1980s, reaching 40%. And these higher rates were a result of there being fewer other taxes bringing money into the government. Because there was no goods and service tax at this point in Singapore, the government kept corporate taxes higher in order to generate the money necessary for social and economic development. And just to quickly touch on poverty/income inequality in Singapore, there are over 250,000 millionaires in Singapore, but not even 800,000 adults have less than $15,000 in wealth. So as mentioned previously, income and wealth are different, and how wealthy people are living in Singapore does not necessarily match up with whether they're a millionaire or not. And the average wealth in Singapore is about $440,000, but this is not a true representation of wealth in the majority of the population. The median wealth per adult, a better measure, is about 117,000.
As Singapore is one of the financial capitals of the world, one of the most important factors is that their monetary policy. Singapore's monetary policy is managed by the Monetary Authority of Singapore, MAS, which is the country's central bank. The MAS operates a managed flow exchange rate government, where the value of Singapore's dollar is allowed to fluctuate within the policy band. The MAS sets the level of the policy band and adjusts it as necessary to maintain price stability and support economic growth. Singapore's monetary policy has been successful in achieving its objectives. The MAS core inflation measures reached 65.8% as of October this year, up to 5.1% from last year's report, around like the same time of the year. In the past 10 years, the inflation has remained relatively the same, as the MAS makes it stable around 1 to 3% yearly. There are some years where the inflation was negative, such as in 2016, because of the decrease in oil prices. In 2022, the inflation rate was around 1.6, which was a little larger than they anticipated, which was caused by higher food prices and higher housing costs. COVID also played a major role in the increase of inflation in Singapore's due to the way it stopped global supply chains, which made some of the goods they normally have been in a shortage. While also achieving strong and sustainable economic growth, the MAS has been able to achieve this through a combination of sound economic management, a flexibility exchange rate government, and a commitment to maintaining price stability. Singapore's foreign exchange market. The foreign exchange market in Singapore is regulated by the Monetary Authority of Singapore. The MAS is responsible for ensuring that the foreign exchange market operates in a transparent and fair manner, and that all participants apply to all relevant rules and regulations. One way in which the exchange rate can affect the monetary policy in Singapore is through its impact on inflation. If the value of Singapore dollar Singapore's dollar appreciates significantly, it can lead to lower inflation by making imports cheaper and reducing the cost of imported raw materials. This can give the MAS more room to maneuver on interest rates and other monetary policies and tools. Another way in which the exchange rate can affect monetary policy is the economic growth. The Singapore dollar appreciates too much. It can make Singapore's exports more expensive and less competitive in global markets, which can hurt the economy overall. If the Singapore dollar depreciates too much, it can lead to imported inflation and hurt consumer spending, which can also hurt economic growth. In this case, the MAS may need to tighten up monetary policy to curb inflation, stabilize the economy. The economy wants to be stable to succeed, and having a good foreign exchange market can help other countries want to invest more in goods from Singapore.
Yeah, and so in conclusion, we can see that Singapore definitely is one of the most stable countries out there when it comes to foreign exchange markets, fiscal policy, monetary policy, and the current effects that a geopolitical crisis has been having on it. Singapore can show through many different ways, whether it be the stock and bond markets, T-bills, or its currency, that it remains stable. And for that reason, we've decided to leave the credit rating at a AAA rating, and we deem that appropriate. However, it is important to note, investors, that you must be wary of the current situation Singapore is in, and that this could change very quickly. But Singapore does have decisive action in case that happens. So for that reason, we've left this credit rating at a AAA. Thank you very much for listening to our presentation.
Thank you.